Hello, I'm Greg Hunter. Welcome to USAWatchdog.com. With us once again, I can tell when this guy needs to come back on because people start emailing me and asking me, hey, when are you going to have Dr. Jim Willie on? Well, today is your lucky day, Dr. Jim Willie. He is the editor of the Hat Trick Letter that can be found on goldenjackass.com. Dr. Jim Willie, thank you for joining us today on USA Watchdog.
Always good to be back. Never a dull moment in the last month.
No, we need to have you on just to update all the stuff you've had on. I know you prefer not to be on. You're coming from, your face not to be shown. You're coming from Central America, but no, I don't think anybody cares. They want to hear what you have to say. And let's start with the Ukraine a bailout deal that the IMF has. Whether it's 11 trillion SDRs, 17 billion US dollars. And this bailout deal that they have. Apparently, now it's reported they're gonna buy gold. What's going on with this with the Ukraine and the violence and the bailout deal?
Well, I recall that a couple months ago I said that just give it time and the whole nation will sink. And the Putin strategy would be to hold off and create a standoff militarily, maybe some skirmishes, but let the nation sink because it's been raided of its gold, it's been raided of its official government funds, and now the energy companies are in there doing fracking, which stands for hydraulic fracturing for the gas water table. I think what's happening now is we're starting to see the breakdown. As a little bit of background, the IMF gave loans to Ukraine of $16.5 billion in 2008. They gave a loan of $15.1 billion in 2010. It's basically a money laundering scheme where the IMF, which, by the way, doesn't have any money. So when they claim that they're going to be funding Ukraine or any other country, it's basically a lie. They don't have any money. Take a look at their accounts. They're zero. So, all right, so they've got this pledge of $17 billion in several tranches to Ukraine, announced on May 1st, denominated in SDRs, which is their basket of currencies. It's basically the dollar, euro, yen, and British pound. There might be another one in there, but I don't think so. I think it's 4. So the initial tranche will be right away of $3 billion. And ironically, the Ukrainians... It's the fascist regime that the U.S. put in there. The part that's not in the U.S. press is that Langley and the shadowy Soros mercenaries, George Soros mercenaries, we're talking about BlackRock and the Soros gang, they installed the fascists, they put on the rooftop snipers, and then they had the press announce that Russia invaded. It's funny what they're doing in the press. I've got a couple American friends who said, Jim, why did Russia invade Ukraine? I said, no, we did. We blamed it on them when they tried to hold off and take their Crimean naval station. They didn't want to lose that. So I said, what would happen if Russia tried to block the U.S. Navy from maintaining control of the Chesapeake? All right, so now the ironic part is that the Maidan Kiev regime in Ukraine has announced that they're going to put aside $1 billion to buy, the equivalent is 40 tons, to buy 40 tons of gold. Well, gee, I just checked, and the U.S. Black Op boys, hardly military, when they have hoods and they don't have uniforms on, pretty much assume that it's the Langley guys with their hooded mercenary thugs. In March, in the middle of the night, they stole Ukraine's central bank gold. It was 33 tons. So why are they buying 40 tons now? Oh boy. So I've got a couple of theories. And in this business, you really don't know what's going on. What you do is you put forth a hypothesis and you keep adding to its credibility, or you keep docking, removing its credibility. It could be that there's some kind of a ploy going on where Ukraine has offered to assist. Now remember, their central bank is run by a Mossad guy. An Israeli Mossad guy is their central bank I mean, this is so dirty, ugly, it's unbelievable. So maybe the central bank guy in Kiev was going to cooperate and enable Germany to get back some of their gold. But keep things into perspective. They're owed 300 to 330 tons of gold, and the U.S. announced a couple months ago or several weeks ago that due to logistic reasons they couldn't facilitate in the return of more than, I think it was just 7 tons all last year to Germany. Well, gee, they had pretty darn good logistics in the middle of the night in March to take Kiev's gold. All right, there's a second possibility here, Greg, and it could be, this is more wild, but somewhat credible. It could be that Putin said, look, we've got by London law, due to a bond that we floated, or a loan that we floated with Kiev a few years ago, we've got London law applying. So if there's an IMF loan, a big portion must go to Russia in return for this loan. This is apart from Gazprom loans. So you got Kremlin loans and you got Gazprom loans. Maybe Putin said, look, you idiots want us to avoid the dollar? You want to sanction us? Okay, fine. We're in line for some of that IMF money, and we don't want your stinking dollars. We'll take it in gold. I mean, this is just total chaos. What on earth is Kiev doing buying 40 tons of gold after the U.S. just stole their 33?
Maybe they need it if it's the first thing they're buying. I mean, they're not buying ammunition or food or supplies or, they're supposed to be broke. If it's the first thing they're buying, it's got to be to pay somebody, isn't it?
Well, it's to pay their mercenaries, too. They got to pay their military. I mean, of all the different budgeted items coming out of Kiev and Ukraine, I think food is near the top of the list, but number one on the list is pay your military. I mean, I'm expecting, recall in Egypt, within 12 months, the Morsi regime fell in a counter coup, funded by the Saudis. Just incredible events are happening. I'm expecting that the Maidan regime is not going to last 12 months. It may not last 9 months. It could last only 3 or 4 months. I'm thinking it'll be gone before September.
Wow.
Just give it enough time and it will sink.
And then who will be taking over? Russia will have control of Ukraine again.
Nobody will have control over Ukraine. I got some dirty, ugly stuff that has been supplied to me. Once I start doing these shows and writing my reports and making comments in public articles, I tend to get items coming from out of left field, the blue. I've got this squirrel mail feature on my Golden Jackass website. It's the Contact Us. One guy wrote me and said, Jim, you should be aware that Kiev has had a banking system working in the shadows for over 20 or 30 years. It's one of the dirtiest places to do banking. That's where the Nigerian online fraud does all of its banking. So if you hear in the news that, oh gosh, a Nigerian outfit was arrested and they're trying to locate, $200 million that have been accumulated over the last 12 years, it's sitting in Kiev. They also do a lot of, banking, transactions for white woman slavery.
It's terrible.
It's done in Ukraine. This is a real dark, ugly corner.
So you don't think militarily it's going to get out of control? You think Putin's going to play this, skirmishes, fights, some deaths, some stuff, but he's not going to invade. He's not going to get the bombers bombing them. He's just going to let the country sink.
That's what I believe. The strategy for Putin is pretty clear, and I thought this from the start. Don't let this thing get out of control. No conflagration. Just force a standoff, because once you have a standoff militarily, you move the whole conflict into banking, economics, and trade.
Yes.
And that's where I think Putin wants to take this war. The United States has already done their sanctions, and they're all stupid. because if Russia complies, they'll just go ahead and make all their energy payments from Europe required in rubles and not even euros. We don't want your dollars. We don't want pounds. We don't want francs. We don't want euros. We don't want any of your stinking paper dollars. We're going to make this in rubles, and that'll screw the London and Wall Street boys who are fooling around with the Russian ruble. Okay, there's something that must be mentioned, and I'm not an expert in this, but I am getting some information, and I'm smart enough to know that it's important.
Okay.
There have been a couple of incidents in the Black Sea where state-of-the-art U.S. Navy warships have been encountered by Russian MiG Air Force. And the story, as I was told, is that the U.S. naval, let's just call it U.S. naval warship. The warship saw the MiG group, the squadron, coming 50 miles away, 60 miles away. They saw it coming. Then at 30 miles, they went into alert. And then at 20 miles, they vanished. The U.S. warship's radar was jammed. State-of-the-art U.S. Navy warships could not detect, let alone target, Greg. We're talking about even seeing a squadron of MiGs. World-class MiGs, state-of-the-art versus state-of-the-art. All right, here you go. Instead of firing on the U.S. warship, the MiGs just circled and circled for 20 passes. The U.S. warship was just totally mesmerized, could not engage in their targeting. And I asked the question, why didn't they pull out a Stinger missile? Why didn't they do anything? And the answer was because they're so reliant on their state-of-the-art, wonderful targeting system that's flawless. They don't have manual. They only have automatic computerized. Then, after 20 minutes of display by the MiGs, the Russian MiGs, they just started flying around, circled, and then tipped their wing left and right, left and right. That's their way of saying bye-bye, F you, bye-bye. The Pentagon is now in shock. They don't have air superiority. They don't have naval superiority. They don't even have missile superiority because of the Sunburn and Onyx that are supersonic and far more accurate than the 20-year-old cruise. So, if the U.S. decides that they want to take on Russia on the military field of battle, it'll have to be nukes.
Boy, that's right. A tough statement.
So, I don't think it's going to be nukes because cooler heads will prevail. And the result will be Ukraine sinks, Russia will play its Gazprom and energy card. A wonderful graph I just posted in my recent report to my clients in the hat-trick letter. 30% of German oil usage comes from Russia.
Yeah.
40% of German natural gas usage comes from Russia. I think you're going to see Russia demand that Germany get rid of the fat cow, Angela Merkel.
Yeah. And
start doing business on a more reasonable, sane basis with Russia. So those are some of my thoughts. You know, it's hard to get complete information, but in the same IMF deal, they urged Ukraine to reach a price agreement with Gazprom before September. They also said that they expect that the local Ukraine currency called the hryvnia, Hryvnia, the hryvnia, they think it's going to weaken. I think it's going to collapse. Then the IMF announced that they expect the Ukraine price inflation to jump by 16.2%. Now, no, bear in mind, not 16.4%, but 16.2%. Okay, how about 30 or 60%? Let's just keep it rough. I mean, these IMF guys are clowns, they're irrelevant, and they're broke. So why are they making a deal when they don't have any money in their accounts? And besides, notice, the United States did not fulfill its obligation and give any money at all in the last 2 years to the IMF. So the IMF is wondering, gee, United States, when are you going to comply? And then the IMF turns around and says we got 17 billion. They don't have any money. It's a joke. It's a total propaganda joke.
Let's move on to the GDP of the U.S. Just came in first quarter, 0.1% was the official number. In the fourth quarter, mind you, their official numbers, I think all the numbers are bogus anyway, but let's just use their numbers. It was 2.6% in the fourth quarter, down to 0.1%. Now Goldman Sachs and J.P. Morgan are increasing that negativity. Now they're saying it's as much as a 0.8% negative growth, down negative growth. It doesn't appear, even by their metrics, this is their numbers, by their metrics, and even the big banks, Goldman and J.P. Morgan, say it was really negative in the first quarter. It doesn't appear this money printing is working, all this QE or these 0% interest rates, the phony accounting. It doesn't appear, and you've been harping on this, that it will not work, and it looks like you are correct again.
Well, gee, Bernanke and Yellen should have consulted with Alan Greenspan. He would have told them that it doesn't work. This is, again, everything is a stinking joke. QE went through its taper talk. Then Bernanke announced, no, we want to reassure the financial markets and reassure the Treasury bond holders that everything's going to be okay, everything's going to be supplied for financial markets and Treasury complex, the bonds. Okay, then Yellen comes in and says, no, we're going to really taper. And then you notice that it's gone from about $120 billion to $340 billion, the Belgian U.S. Treasury bond account. So, Yellen is lying. Again, this thing is a whole big joke. The whole global financial structure is a joke. It's toxic. It's broken. It's a joke. In case you didn't hear me, it's a joke. So Yellen is lying and doing backdoor QE bond volume monetization.
In other words, there is no taper. That's what many people have said. There's no taper.
No. It's at least $100 billion a month.
I've had one of my sources say it was $125 billion. Which also echoes your thing, saying it's way higher. The consensus of people I talk to say there's no taper. You say that. It's way higher than what they're saying. Even the $85 billion a month. You say that. Because if they did taper, bond prices would crash and interest rates, yields would spike. The stocks would crash. They're not going to do that.
They're not going to do that, right. And notice that whenever they talk about the details of QE and where is the volume, they talk about treasuries and they talk about mortgage bonds. They never talk about derivatives. The derivatives are more than the mortgage bonds plus the treasury bonds combined. That's where you get over the $100 billion. All right, let's just talk dynamics of this so-called stimulus. The only thing it stimulates is the stock market prices and the bonds. It doesn't stimulate the economy. In fact, it does the opposite. I've mentioned this several times on your show. When you do bond monetization, it is unsterilized. They are not saying we're going to move in $50 or $80 billion this month to cover bonds, but we're going to take $80 billion out from something else. There's nothing else to take it from. So it's unsterilized. This is toxic. This is hypermonetary inflation. So what's the global response? I've been down this road several times, but it's always worth repeating because people tend to think it's stimulus. It's not. It's a wet blanket. What happens is the entire globe starts seeing a rise in all commodity prices.
Boom.
The money comes into the system. It leaks out through the financial sector. But apart from the leakage, there's a general response from the markets to bid up commodities. And notice that you don't see a fall off in crude oil like some of the clowns are talking about. Oh, the deflation is going to see lower demand for oil and energy in the economy, and we're going to see a fall off to $50 in the crude oil price. Morons! No. What you get is the entire cost structure goes up. So what you're seeing with this really puny, altered, I mean, you've got a 5% lie, every single time the government comes out with their GDP. It's a 5% lie. Why is that? Because they lie on what price inflation is. What is actually happening is inflation, and they call it growth. They say inflation is 2%. It's really 7%. They've got a 5% lie. You've got to reduce their GDP by 5%. We are now down to a minus 5% recession, whereas before we had only a minus 3% recession. Now we're accelerating in our downward spiral because the effect of QE is capital destruction. Imagine you're a big company on one side, or you're a small business on the other side. Your cost structure is going up. Your profits are disappearing. So the big business says, we've got 18 business units here. We're going to shut down 2 because they're the biggest victims of the cost increases, and that's where we're not making any money. So you retire all the equipment, you retire the computers, you retire your fabrication equipment, your machine tool equipment, and then the little business says, we just can't make any money, we're going to close down, we're going to liquidate, and that's why you get nice big discounts all over the place for clothing and liquidation sales. A third of all U.S. malls are now empty. This is not recovery, people. So you're getting an acceleration of the failed monetary policy. And I showed it in a public article a couple of weeks ago, might have been 3 weeks ago. I showed that the money supply was radically going up. And here's some figures. Money supply in 2009 was $800 billion. Money supply in the most recent snapshot is $3.9 trillion. That's up almost 4-fold.
Staggering.
What's the benefit? There's no benefit, because it's not being devoted to, capital formation, equipment purchases. They call it CapEx, capital expenditures. It's not happening in the United States. It's happening in Asia. It's happening in emerging economy. So with this big rise in money supply, gee, you'd think that the economy is being stimulated, right? No, it's not. The wet blanket effect from hypermonetary, unsterilized inflation is that the money velocity multiplier is falling. And here's the figure. It was 1.6 times in 2009. It's down to 0.7, a 50% or more drop in the money velocity, which is calculated as the number of times a single dollar gets circulated within the economy within 1 year. So we're not even getting one time in this recession, and watch it decrease. We're seeing businesses shut down. We're seeing business segments shut down. This is capital destruction, and this is why Greenspan warned. He said back in, he had 2 different cycles where he'd bring, exceptionally low, ultra low interest rates, and he said, you must do this no more than 3 to 6 months, because it causes damage to financial markets. It causes damage to the capital structures. He's talking about profitability. All right, so never did Greenspan have an ultra-low stimulus for more than 6 months. We're into our 4th year.
Yeah.
So now after...
And only it's working all right. It's working, to your point, it's destroying stuff. It's destroying capital.
It's destroying the economy.
Yes.
It's destroying the ability of businesses to make money. They can't make money, so they shut down the business units. They shut down the small businesses altogether. And you retire the equipment. I focus on capital. We are supposed to be a capitalist economy in the United States. We're not. We're a consumer economy. We're a bond fraud economy. And now we're a QE, inflation economy.
Which brings us to the next question that I wanted to talk to you about, and this is your critical mass in gold trade settlement. And if you have the U.S., the world's reserve currency at the moment, everybody's running away from it trying to get this new system. You've been talking about this, that, this is going to be enough people to get into this gold trade settlement system. You have China and Russia with that 20, with lots of gold. I think you're quoting it 20,000 tons each.
Yes.
How do you come up with
20,000
20,000
each.
tons? Those are your sources that say they have all this gold? Tell me about the gold trade settlement.
Okay, the 2 points are making gold-backed currency and getting critical mass with a new trade zone and trade settlement system. Okay, let's just do. Okay, let me. Oh, it's very hard to even know where to begin. This is a very important and very convoluted story, but let's just fill in some news recently. The Chinese announced that it's not going to be 2 years, it's going to be 2 months. The Shanghai Free Trade Zone is going to have a fully convertible Chinese yuan. That's an important step toward having gold trade settlement, gold trade notes for letters of credit, and the super event, return to the gold standard to trade. All right, the Chinese are about to have a fully convertible yuan currency. That means you can convert it to Mexican pesos. You can convert it to Swedish krona. You can convert it to euros. You can convert it to British pound, to Japanese yen, Australian dollar. Okay, fully convertible capital account for the Shanghai Free Trade Zone. That's an enormous story, and it's not in the U.S. news. Why? Because it signals that the yuan is about to become an extreme competitor to the dollar in trade settlement, and therefore rival it as a global reserve currency. By that, I mean used in banks as a reserve item. Your banking system in Italy is all treasury bonds and euro bonds. They might have a sprinkling of UK gilts or Japanese government bond, but it's pretty much all U.S. treasuries and euro bonds. All right, so we're making
Wait,
steps.
Jim, so what happens when they have full convertibility, so they'll have their own yuan-based bonds? What happens to the price of the euro bonds and the U.S. treasury bonds in that environment when they get fully convertible, up and running, and you say in 60 days?
I don't expect to see a price effect. I expect to see a QE, volume effect. They're not going to let the treasury bonds fall in price and rise in yield. They're going to up their volume and do so very secretly.
They're going to print even more money.
They're going to print money, but they're not going to talk about it. What they've done now is they've moved to QE3, and what I call QE4 is based in extreme channels and grand lies. They're talking about tapering. Notice that Yellen talked about reducing by 10 billion in a single month. In that same month, Belgium increased by 30. Okay, so they're lying, and they're using back doors. Furthermore, the Japanese are desperate to buy treasury bonds to keep their yen down. So Belgium and Japan are the only countries that are buying treasury bonds, except maybe the British. But I don't distinguish between the U.S. and the British. The U.S. is a British colony. Ever since 1913, the establishment of the Federal Reserve contract, the U.S. is a colony. And we masquerade as a republic. Now we're basically a fascist state. All right, let's get to this issue on critical mass. We're making steps. They're more like big strides coming now toward the yuan being a fully converted, fully convertible, internationalized currency. Now, keep in mind that you've got lots of countries, like regarding the yuan swap facilities. You got Brazil, Australia, New Zealand, Japan, Germany, London. These are big countries. These are Western countries. They've all got yuan swap facilities, which means that they're not going to conduct trade settlement in dollars. So it's already in our Western camp. Pardon me. It's already in our Western camp that these countries are not going to settle in dollars or deal in dollars. The banks will be excluded from dollar trade. All right, we're moving now toward a next step with the Shanghai Free Trade Zone. By the way, Free Trade Zone, all that means, well, it means a lot of things, but among the things it means is that in Shanghai, you're not going to have big customs inspections. You're going to have qualifications for being an acceptable trader. And then everything you do is going to be A-OK. You're not going to have these big tariffs. You're not going to have any investment bankers. There will be zero London and Wall Street bankers in the Shanghai Free Trade Zone. You're going to have bank accounts for corporations that are completely private. Zero sharing with any Western nation of banking details. This is a very big deal. And furthermore, with such success, the Chinese have announced that they're going to have 2 other free trade zones, one outside Beijing and one in, I think it's called Zhangzhou, or I can't remember. It's basically the region just outside Hong Kong.
And what does this do for the price of gold? A lot of people are saying, hey, wow, they've had it pegged right at about $1,300 with their phony price. I know you say what they say is the price of gold isn't really the price of gold, but what about the overt price rise in gold? Is that going to happen in 2014? Are people going to start front-running this trade and say, boo, I'm panicking to gold? Do you see a panic into gold?
Well, I'd like to finish the answer on critical mass, but that's okay. I'll try to mix it in together. With all these developments toward a gold-backed currency, you're going to see quantum jumps in the gold price. To give you the simplest answer, Greg, you're going to see the big move in gold when the Chinese are no longer able to get London and New York gold. I believe, without much doubt at all in my mind, that the Chinese have hired J.P. Morgan to keep the price down and to supply them of gold. They bought their headquarters, they bought their vault, and now they're buying various Wall Street commodity trading entities. And I believe the Chinese have hired Wall Street, principally J.P. Morgan, to supply them with as much gold as possible, and the Chinese are helping to keep the price down. The problems will come and the price jump in gold will come when the Chinese are no longer able to get their 1,000 tons per month. They've been getting 1,000 tons per month since April of 2012. That comes to 25,000 tons from London alone. 25,000 tons since April of 2012. They're continuing to get 1,000 tons per month. The Chinese do not want you to see the $2,000 price per ounce because they're not finished acquiring our gold. All right. Back to the gold-backed currency here. I'm almost done with this answer. It's a tough one to give a solid answer for. But all these developments are working toward a gold-backed currency for Chinese yuan. It will not happen alone. It will happen with the Russian ruble being gold-backed and probably being required from its European customers to buy oil and gas. Why will it not be just China and Russia? Because the Chinese and Russian total trade does not amount to more than 50%, 60% of global trade. The Chinese and Russians right now, ever since Easter Sunday of 2010, have been working closely together in what they call the wiring in the platforms. You cannot have an asset-backed currency without having total connection between the currency markets and the commodity markets. If you have asset backing to your currency, then you must have backing and connections to the asset markets that do the backing for your currency.
Got it.
So, if you have a gold or an oil or copper-based currency, which is what the Central American dollar might have, the Panama authorities are working with Ecuador and Venezuela to produce a gold, copper, and oil-backed currency. All right, so you must have critical mass. The Chinese and Russians realize this. So I expect that what we're going to see before long is a Gulf dinar and a Nordic euro and maybe even a Norwegian krone. But I got a quick little story. I don't want to forget. I'm going to make a note here. The Turkish banker. You must have the Chinese and Russians working closely with Brazil and all the BRIC nations Now they've got a new name. They don't call them the BRIC nations. They call them the BRICS and Associate Nations. There's a list of over 80 nations now that are aligned with Russia and China. This is going to be your critical mass. And if all these I'm talking about, Burma, what do they call it now, Myanmar or whatever, Vietnam. We're talking about Ecuador. These countries in Bolivia, they've all signed up to join the BRICS movement of a dollar alternative. They realize that their banking systems and economies are in ruins because of the dollar being toxic and the QE being printed at $100 billion a month.
It's not anti-American, it's survival.
It's survival. We've got to the point where these countries are not saying, we don't like you, we're going to do something else. They're going to say, we want to survive. We must do something else. So now what you've got is all these BRICS and associate nations, led by China and Russia, they're going to be working closely together with a different payment system and eventually a different currency, and they're going to have critical mass. I believe, I'm not sure of these numbers, I believe it's something like 65% of the global trade is from these BRICS and associate nations. That does not include the United States, Britain, and France. Those are the three most vile nations in the West for terrorism, usage of hegemony and banking agencies like World Bank and IMF and subterfuge and putting in, spy agents in banker role. All right, so the critical mass is important. And I believe that as time passes, more nations come on to become BRICS associate nations, and Russia and China is getting indications that it's like a needle is going up. It's up to about, let's just say for argument's sake, it's 65%. So they're approaching 2/3 of global trade could be included in the new trade settlement system with a soon-to-be-announced gold trade note to be used as letter of credit. Non-dollar. If they get critical mass, let's just, for a moment, suppose they don't have critical mass. It's just Russia and China going off prematurely. Well, they only have, let's just say, 28% of global trade. Well, all the nations that are not on board will suddenly see the price of Russian and Chinese goods go way up because their currency is going to go way up. You don't want to be a victim of your own success by having a fast-rising currency that wrecks your export trade because countries like, say, Brazil wouldn't be able to purchase Chinese finished products because the Chinese gold-backed yuan just went up 40%. So you need the critical mass so that the tables are turned.
Everybody on the rise.
And then what happens as that table is flipped? The U.S., France, and England, and the other nations that are not on board to the BRICS and associate nations, that 30% non-critical mass, suddenly are left out, and they suffer price inflation.
Huge price inflation.
Their currencies go down, rather than the Russian and Chinese currency, the gold-backed currency going up too much. No, the non-gold-backed currencies go down too much, and they suffer price inflation like a nightmare.
Could the U.S. kick the table over and start a big old war in the Middle East, or just start a war? No matter what.
In Syria? You mean like in Syria, like in Ukraine?
Yes. Could they just kick the table over and?
No, they already did. They already did. We're already there. That's our response. We already are fighting wars to prevent this table flipping. That's why we went to war. If you look at the dollar, I made a joke when I started the newsletter in 2004 and 5. I said, the principal backing behind the dollar is U.S. military. Now that is more evident than ever.
I'd say you are correct, sir. Let's move on to the final thing. You're talking about, this dovetails in. What about flipping more and more nations over? I mean, don't they need Turkey? Isn't Turkey traditionally for hundreds, if not thousands of years, a trade hub for gold and other things? Don't they need countries like in NATO, like Turkey, to flip over to the east, and other countries to flip? To swing these people into the camp? I guess for all intents and purposes, the camp of the east.
The camp of I call it the Eurasian Trade Zone, or just the Eastern Hemisphere. the Eastern trade zone, the Eastern world. Pretty much everything now is Western-centric until 2000 when China came on board. You could actually say for years and years that Japan was part of the West. Korea was part of the West. But that's not true anymore. Japan, Korea, and China are working together now. They're trying to, coalesce the ASEAN, the Association for Southeast Asian Nations. ASEAN is now an important group. And when Japan announced that they wanted to put their full weight behind it, suddenly they had an accident in Fukushima. I'm not saying it was actually done. I'm actually saying it was an immediate consequence. So you've got three nations here, Greg. These are what I call the swing states. In the United States, you had Ohio and Florida to rig the election for Obama and Bush. In the global chess game, it's Germany, Turkey, and Saudi Arabia.
Those three have to flip, and they're in the process of doing so, are they not?
I think two of the three already have.
Germany and Turkey?
No, not Germany. Not Germany. Germany,
Turkey and Saudi Arabia.
Yeah.
And there was reported yesterday that the Saudis thwarted an Al-Qaeda attack. A big Al-Qaeda attack the Saudis thwarted.
Yeah, if you look... All right, I'm having a little bit of throat problem here. I'm not sick, I'm just talking loud. Okay. If you trace the origin of the Saudi attack, I think you'll find it in a little community outside Washington, D.C. called Langley.
You're saying that because they've already flipped, now you're saying that they're...
I said 2 months ago, look for Saudi Arabia to be vilified. Look for them to be accused of being a terrorist nation. Look at them for being a bad player, bad faith player for trying to normalize their relations with Iran. At the same time, look for Iran to cozy up and have trade deals with China and Russia, develop the Iran pipelines for Gazprom that go to the Mediterranean. That's what Syria was all about, trying to block the Iran pipeline for Gazprom. So I believe Turkey has already flipped, and the evidence for that is that the primary intermediary to make the Iran workarounds. Okay, Iran suffered a U.S., UK, somewhat Western Europe sanctions, and they had to work around. So how did India buy Iran gas?
Gold.
But to use Turkish gold. So the Iran workaround has turned out to become the prototype. All these sanctions have a backlash of enormous consequence. The Iran workaround is now the prototype for Eurasian Trade Zone gold-based trade settlement. Turkey has already flipped, and if they flip on their Air Force base, the Incirlik Air Force Base for NATO, the U.S. has got a big problem because that's where all the Afghan heroin comes from.
Oh, boy.
The Turkish NATO air bases. And it goes from there to the German and the French and the Italian NATO bases. They're heroin centers. All right, so Turkey has got some critical elements. They're a NATO member. They just announced a sizable Chinese weapons deal. But let me get. I'm glad I put a note here. I had a client contact me and said, Jim, we should talk. I learned something. I live in Kuwait. I'm a math teacher. I learned something you might find interesting. Besides, I got some questions about buying gold. All right, so we ended up talking for over an hour, Greg. I'm not making this up. She's a school teacher, in an English-speaking Kuwait Persian Gulf school. And I said, do you have any interesting stories? I mean, direct stories, or is this word of mouth? She said, no, this is direct. I sat on a plane ride from Turkey to Kuwait. Ankara, Turkey to Kuwait. I mean, we think of it as a hop, skip, and jump. No, these are big distances. She said it was a 6-hour flight. That would confirm. I haven't done all the check. Anyway, she was on a flight from Turkey, ended up in her home of Kuwait, and on her left was a Turkish banker, and on her right was an Egyptian economist. So assume that the Egyptian was educated in England and therefore a moron, just assuming, trained in the Keynesian methods. And he told this woman, no, the QE is working well. The response by the Western bankers with the British and Americans and the Draghi central bank in Europe, it's all working. We got a recovery. It's in progress, and things are actually working quite smoothly. Okay, and she said, but what about this, and what about the Belgian? Because I read that Belgium, she reads some of my work. She reads the report. So she said Belgium has got this big bulge in their treasury bonds. Is that part of QE working? So the guy got embarrassed right away, and she said, well, if QE worked, why'd they need QE2? And if that worked, why'd they need QE3? So she shot the guy down, and then the Turkish banker joined the conversation. And, he made a lot of points to silence the ignorant economist trained in London living in Egypt. But then the woman asked the Turkish banker, well, gee, I've read that the Turkish banks have been intermediaries for supplying gold for Iranian energy sales. Could you tell me anything more about that? And he said, oh, yeah, that's kind of old news. Of course, there was a lot of assistance there. It was easy to work it around. All we had to do was use non-government banks in Tehran. And that's what they did. The sanctions, the idiots in Washington who made the sanctions said that the central bank cannot take in any gold. So they moved it into companies in Iran. And the Iran central bank exchanged gold with their own private financial firm. I mean, these guys are stupid. They're stupid. The guys who make the U.S. sanctions are stupid. So then here's what the Turkish banker had to say. He said, we're working on something now that I really can't talk much about. And he started, giving facial expressions like a raised brow and a smile. And then he motioned over to the economy. He said, look, I don't want to get into a big debate here because our friend over there thinks that things are fine, but we're working on something in the entire Middle East set of countries. It's in the currency arena. It's going to be new. It's going to shake up the world. And I'm looking forward to its launch because it's really going to set things right.
Oh.
And the woman said, are you talking about a gold-backed currency? And he said, I'm not going to give you any details. And she said, are the Saudis going to come out with a gold-backed Gulf dinar? Finally, they've been talking about it for years. This woman is not just a math teacher. She's a bit of a student of finance, apparently. She had lots of good questions to press this guy. And the guy really answered with facial expressions. His face said yes. His mouth said, I can't say.
Which would be the end of the petrodollar, basically.
Well, yeah, I think we're going to go straight to the petro yuan, Chinese yuan-based sales, or compatible, what do you call them, concomitant, simultaneous dollar and Chinese yuan payments for Saudi and OPEC oil. Now, wouldn't it be interesting if Nigeria announces that they're going to, as an OPEC member, Nigeria will accept Chinese yuan? That would be interesting. Would that make Nigeria a terrorist state?
Well,
by U.S. definitions, it would. So what we're going to see is, I think, a movement in steps. Nothing is going to happen fast and furiously. It's going to be petrodollar to simultaneous petrodollar and petro yuan. And then I think it's going to be gold trade letters of credit. And then it's going to be a series of gold-backed currencies, the more the merrier, and it's going to include Panama. Panama has gold. They have so much gold that I did a calculation of per capita. They have 4 times as much gold as Fort Knox at its height. On a per capita basis, they had 28,500 thousand tons of gold, whereas Fort Knox had 8,500. So Panama, with their Central American dollar, will have a gold, copper, oil-backed currency. It's going to be a parade of gold-backed currencies because what they're going to see is, hey, these guys have critical mass. Russia and China have a lot of countries behind them.
And what does that do to inflation here in the U.S., and what does that do to the price of gold?
Well, it's going to get really weird and complicated because the U.S. is very dedicated to fraud and lie. They lie everywhere. There's not a single economic statistic or financial market index that's truthful. Not a single one. Just today or yesterday, they had a jobs report but they didn't let it be known that they included 234,000 fictional jobs from the birth-death model. I mean, there's no end to it. So the United States is going to say, hey, yeah, you've got these 7 or 8 gold-backed currencies around the world from all these different continents. We got one, too. It's the new Republic dollar. And it's going to be backed by oil in the Strategic Petrol Reserve. It's going to be backed by gas from all our fracking. It's going to be backed by gold and all our deep storage gold. The gold will be a lie.
Yeah.
The deep storage gold is mountain ore, unmined, committed future production. The U.S. is going to be liars, and they're going to be called on it, and their gold-backed Republic dollar is going to be sold into the shithole, down in a series of devaluations. I'm expecting, once they announce the new dollar, the separate dollar is launched, it'll be instantly devalued by 30%, and then eventually over a 2 to 3 year period, an 80% devaluation.
And what happens to the price of gold, say, between now and the end of the year? Just handicap that. What do you think?
I don't know. You always the questions have a time element. I say, well, it depends on how well the Shanghai trade zone works. Depends on whether the Russians demand rubles or other currency like gold for their energy payments. It depends on everything. But if I had to guess, based on unknown events, the answer depends on 5 different events. It's an event schedule. My guess is that the end of the year is going to look nothing like the beginning of the year. And I believe that's going to reflect on the COMEX. The COMEX might have stories about how they're going to have to shut down their gold futures contracts, because they don't deliver any. They deliver cash equivalent for gold contracts. So what's the price going to be? To be honest, by the end of the year, I don't give a crap. I care about the factors that are going to shut down the COMEX, the factors that are going to lead to gold trade letters of credit, the factors that are going to lead to an explosion of free trade zones, including in the United States, New York State and Idaho, California in particular. I care about events like introduction of gold-backed currencies. I care about completion of the wiring and platforms that link the currencies to the commodity markets. When all these things happen, I don't know when that's going to happen. You're going to be looking at $7,000 to $10,000 gold. And, I kind of laugh because people tell me, oh, there he goes again, 7,000 to 10,000 gold. What an idiot the jackass sounds like. No, I say, what an idiot you are for not comprehending QE. Not you, Greg, but the guys that criticize me. You say things are normal, you say that we got a recovery, but you don't even know how to calculate price inflation. You don't even look at the shadow government statistics that indicate that it's 7 and 8%. You don't look at the correct GDP declines. You don't look at the correct job market. You don't look at the correct housing market. You don't even know that the main impetus behind the U.S. stock market is the Fed itself. So you're an idiot, not me, and when these things come to pass, of course, I'll just be lucky.
Well, on that note, I don't think you'll be lucky. I think you'll be, right on the money. On that note, we are going to draw to a close. Of course, Dr. Jim Willie is the editor of the Hat Trick Letter, which can be found on goldenjackass.com. Dr. Jim Willie, thank you so much for joining us today on USA Watchdog.
My pleasure. Good to be back always.